gentlemen, those were the headlines. And first up, beginning the show with an exclusive chat, like I said, that I had with Anant Narayanan, who's the founder of Brnd ME. It's a company quietly building the next wave of consumer brands, global consumer brands, building from India for the world. From party props to personal wellness, Brnd ME is riding the wave of India's design and manufacturing edge. This is essentially to build billion-dollar brands with a global appeal. In fact, I spoke with Anant this morning on scaling D2C brands going global, and how his vision is looking at making Brnd ME a global company that's built in India but built essentially for the world. Remember, the company is currently operating in United States. That happens to be a big market. So I also had a chat with him on the impact of tariffs. At present, they're 25%. What is the company looking at in terms of diversification? All that and more coming up in this chat. Listen in. Thanks very much, Anant, for taking the time out and speaking to us here on ET Now on Startup Central. There's lots to talk about so far as Brnd ME, your company, is concerned with respect to its diversification, the acquisitions that you've made into different product categories, and of course your IPO. But let's first talk about the rebranding from Mensa to Brnd ME. What prompted that change?
We believe that Brnd ME actually represents a little bit more of what we're doing. So brand is brand, dot represents digital first, not digital only, and me is the consumer. So Brnd ME, we felt, was like a great name to sort of tell the world what we're actually up to, which is building global consumer brands from India for the world in a couple of spaces. Okay.
So you talked about, building from India to the world. I'll come to that point in just a bit, given the fact that, the government has been focusing on making the Indian startup ecosystem the #1 in the world. And of course, the Prime Minister has also reiterated about making in India and making for the world. So how are you sort of delivering upon that promise?
So I'll tell you a little bit about what Brnd ME does. We have brands in two spaces, health and wellness and lifestyle. And I think both spaces are poised for building brands from India for the world. Why is that possible now and not 10 years ago? One, distribution is more democratic. Consumer data is more readily available. We have lots of design and manufacturing talent in India, and our ability to do marketing from India for the world is better. So I think there's a unique opportunity over the next 20 years to build global consumer brands from India. And what we're trying to do at Brand ME is build 3 big brands in the health and wellness space and 6 to 7 big brands in the lifestyle space. And I think we're very excited about it. About half our revenue today comes from outside India, which we're very excited about. And so we're building here and going global, like IT services and pharma did in the last 10, 15 years. We think consumer brands will go global over the next 10, 15 years. And that's what we're trying to sort of lead, if you will.
Right. So what really is this entire opportunity that you talk about? You say that, the global markets are going to get in more revenues for you, and there is a huge consumption story that's playing out globally as well. What gives you that assurance?
Yeah, and so firstly, by the way, I think there's a massive opportunity in India as well. So I think the India consumption story continues, and that gives you a base home market advantage for manufacturing, scaling, sourcing advantage, right? I'll give you a couple of examples. We've built one of the largest aromatherapy brands. It's a brand called Majestic Pure. India always used to export bulk essential oils, body oils, massage oils, but we never built a brand. Now we're trying to build a brand called Majestic Pure, which is global. We sell in the US, we sell in the UK, we sell in Germany, we sell in Canada. We now started selling in the Middle East, and we sell essential oils, body oils, reed diffusers. And that is a large aromatherapy business that we're trying to build. It's always been disorganized in an organized space. No large players are there. And India has always been a supplier of raw material, but not necessarily building a brand. And we believe that we can solve that problem. So that's the kind of thing that I'm talking about when we say build global brands. We pick niches where India has a manufacturing and a design advantage, and then we build a brand in that space where we can be a global market leader.
Right. So which brands or which categories are you currently focused on? I believe that as far as your portfolio of companies is concerned, it's around health and fitness. And of course, beauty is another bet that you're taking on. But are there any plans to expand into any more categories basis the kind of demand trends that you're seeing?
So look, we're in 2 very large spaces. One is health and wellness, and the other is lifestyle. Both these are multi-billion-dollar categories. They're growing fairly rapidly, both in India and globally. And in both these, India has a big advantage. So the brands that we have, for example, are in, I mentioned Majestic Pure in aromatherapy, but we have a very large healthy snacking brand called MyFitness, which is a peanut butter healthy snacking brand that we're now actually with India starting to do more protein. we're starting to do in India, but we're also going to the Middle East and sort of scaling in the Middle East. We have a value-added hair oil brand, which we sell mostly in the US, UK, and Germany again, right? Again, made in India, sold globally. And then in the lifestyle space, we have something very interesting. One of our largest brands is called Party Props. We are the largest seller of, party birthday celebrations for kids and adults, right? And we sell combo packs. We have about 50, 60 women in our Bangalore warehouse who are actually making them. And then we sell them here, but we also now sell them globally because they are paper products and so on. And we can sell them in India, we can sell them in the US, we can sell them in the UAE. And as you get more scale, you can also set up these supply chains globally, which makes it more efficient.
Right, and that's something that Indian companies are looking at even as we're seeing global trade diversification, supply chain shifts that are happening. So it's going to be interesting how an Indian brand actually looks at scaling globally. But Anant, talking about your global presence, I believe that you're present in several markets in the United States as well, in the Middle East as well. If you could take us through how all of these markets where you're present, how are they different from the Indian market and the kind of revenues, the kind of growth that you're seeing in each of these markets?
Yeah. So we are present in the US, UK, Germany, and the UAE. So they're all quite different from one another. The first thing is actually it's very nice to be able to understand consumer behavior in lots of detail because now the data is available, right? So consumers look for slightly different things in each of these markets and our products are tailored differently for each of these markets. That's number one. Number two is we're seeing a lot of growth in the US, UK, and Germany. US, UK, and Germany, I think, are going through a phase of looking for mass premium products, so affordable products, but in, premium products, but in the affordable segment, right? So, for example, pure and natural essential oils, but at $10.99, $12.99, and there's a big growth there because the nearest competitors are 2 times, 3 times the price, right? So that market is growing quite nicely. The Middle East is very similar because of a large South Asian population to India. So even our lifestyle brands do very well there, including our fashion brands, and they have started going global. And there it's a very India plus type market, especially KSA.
Right.
But both KSA and the UAE are both interesting markets for us. Because now we're sort of reasonably large, we've also set up warehousing in each of these locations that allows us for better supply chain flexibility and how do we actually get to products faster to consumers and how do we tailor them better. But all of the design and manufacturing backend is centralized here in India. And I think that gives us a huge advantage.
Absolutely. Anant, you also mentioned about the US market and the kind of disruption that we're seeing globally, whether it's related to exporters, the trade deal between India and the United States hasn't really happened. 25th August is when a team from the United States is expected to arrive. So there are hopes that perhaps a deal will be sealed. There will be some sort of an understanding that will be arrived at. In the midst of these circumstances, is there any impact that you're feeling on that part of your business? So,
look, too early to tell. I think hopefully the trade deal does settle and we get to a reasonable tariff that makes sense. Currently, the tariffs are 10%, which I think are very possible in an environment where you're building a brand. Remember, we're not exporting commodity. We're actually building a brand and charging a premium, right? And therefore, we're able to absorb some of that. But over time, as the tariffs, if they go up, I think we'll have to rethink supply chains and how we actually manage that process. I am hoping the next 20 years is big for India consumer brands going global. So I think as the governments sort of come together, it's a big opportunity both for India and I think potentially for the US as well, as we think about brands coming in at affordable price points for consumers there.
Right. So when you mentioned about the tariffs bit, well, 10% was the baseline tariff. Donald Trump announced that a 25% levy, along with additional penalty, will be imposed upon India. We are yet to get more detail on that. But when you say that companies might have to look at alternate supply chains. So which geographies will companies like yourselves be seeing?
No, so we'll push a lot in the Middle East. We'll push a lot in Canada. We'll push a lot in UK and Germany. UK, we have a great deal. And UK, our business has been growing fabulously. So I think, look, there are lots of global markets, right? And I think we will figure out the best possible global market for our products based on cost structure and where we can really compete.
Right. And that UK-India deal that has been arrived at, what kind of synergies is this going to create between businesses in the UK and what does it mean for companies like yourselves?
Yeah, I think it's a big opportunity, actually. So I feel like, we're actually now starting to make a big bet on the UK. Several of our brands had a good start there, but now we're putting a lot more effort into saying, how do we actually get there? How do we build the largest, for example, party celebration brands in the UK? Can it come from India, right? So these kind of things we're starting to do. I think it's early days, but my sense is, by the way, our UK business can grow 3, 4, 5 times from now.
Okay, 3, 4, 5 times from now. So that's an
Yeah.
incredible market, major
Incredible
market.
opportunity.
Right, right. Anant, let me also ask you about some of your exits. Like you've exited companies like Pebble, for instance. It's an
Yes.
electronics brand. You told me you've minimized your stake in companies like Rennie Cosmetics.
Yeah.
What's behind those moves, and will you be looking at similar moves, exiting brands and of course investing in new ones? What's going to be your strategy?
So look, firstly, we are not an investor. We're an operator.
Right.
Think of us as a new age version of Unilever, right? That's what we're trying to build. A new version of Unilever from India for the world, right? In health and wellness and in lifestyle. So one of the things I've learned over the last 4 years is focus actually matters. So as we focused on health and wellness and we focused on lifestyle, electronics didn't make sense. So we actually exited the business. Renee actually was always a financial investment. We knew them, and I think it's been a great financial investment. And so we'll continue to sort of, it was a financial investment. We had a good opportunity, so we sold it, right? We also exited a couple of the media businesses that we were in.
Yes.
But now I think our portfolio is set. We have 10 brands. These 10 brands all have massive opportunities. Each of these brands can be a 1,000 crore business, right? $150 million brand, right? So we believe that there is a massive opportunity. Our current set of brands are the right focus areas for us. Very large TAM, global, structural niches where we have a cost advantage. So we feel really good about saying now we put pedal to the metal, portfolio is clear, TAM is clear, our product market fit in terms of products really working. Our top 4 or 5 brands are really sort of doing quite well, which I was mentioning earlier. So that's what we're now focused on. It's the correct portfolio. We are focused on health and wellness and lifestyle, and we'll continue to build on that.
You'll continue to build on that for the Indian market and of course for global markets as well. But Anant, if you could get us a view on financials of all of these companies, your vision is to take them, each of them, and make them into a 1,000 crore brand. But where do all of these brands currently stand? And if you could give us some financial details of Brand.me as well.
So look, over the last 7 months, we have now become EBITDA profitable. And we are actually focusing a lot on free cash flow, operating free cash flow, and saying how do we generate cash, which I think is the ultimate answer for any business. And I think that's taken us a bit of time to get there, but we're now very excited by it. FY25, our financials are not closed yet, but they will be, but the year before we closed at about 1,470 crores, which is a large number. I mean, for a 3-year-old company, and now we're a 4-year-old company. We believe that we will continue on a good growth trajectory, especially with our focused portfolio. And look, 18 to 24 months from now, we would love to see if we can be a public company.
18 to 24 months from now, and you're not looking at revising that timeline?
No, we're not looking to revise that. So we are doing the Ghar Wapsi, so we're coming back to India. We're very excited about coming back to India. We have started that process. The first step in the process, both in Singapore and in India, has been done. So it's a 3-step process. So we are hoping that before the end of the year, we're an Indian company. And after that, we will sort of start the process for saying, how do we think about going public?
So what's the timeline that you're giving yourself in terms of finishing the Ghar Wapsi, as you stated?
I think by the end of the year, if we can actually, by end of this calendar year, if we can actually get there, we'd be very excited. And I think its process is full on. So hopefully it'll all sort of come through. And we're very excited. And I think, look, India over the next 20 years, I mean, I think BrandMe, we're here to build for the long term.
Right.
This is also my 3rd venture. I sort of feel like here to build it for a very long period of time. I think going public is one step in the process. It's not the goal. It's an interim step in the process. You're changing one set of investors for another set of investors. Right. And we believe that the next 20 years are going to be great years for building global consumer brands.
Absolutely. In fact, policies have to be driven in that direction, and I think businesses also need to focus on driving that in the right direction. Also, help us understand the quick commerce part of the game.
Sure.
I mean, there are so many entrants now. Many food business companies, e-commerce companies are also showing interest, given the fact that the delivery timelines are so short here. How much of your business is currently dependent on quick commerce, and would you be looking at expanding the pie of quick commerce in your business?
Yeah, so quick commerce has been great for us. So look, we're a brand business, so we want to be where consumers are. So whatever is the easiest way to get to consumers, we want to sort of get to them. Quick commerce has actually started to change consumer behavior. I mean, you go from planned purchases to unplanned purchases, right? About 8 to 10% of our business is quick commerce now, which is actually, by the way, a reasonably fast growth. If you think about it, it sort of was not very much 18 months ago, right? We work with all the players. I think we're very excited, by this opportunity to do faster delivery, because anything that adds value to consumers. I'll give you an example. Our party celebration business is called Party Props. It's a classic case for quick commerce because most people forget birthdays, anniversaries,
Right.
want decorations. And we've been able to build a category jointly in quick commerce with all of our partners, right? And I think that's been great. So I do think it's here to stay. I think it's an interesting channel, especially given some categories, which are more impulse categories, right? Where you need it quickly.
Right.
And I think that's been great for us.
Right. But there are concerns related to significant cash burn on quick commerce. How do you address that?
Well, I'm a brand. I'm not running the quick commerce company. For us, I think the question is, can we create a sustainable business model with the quick commerce company? Ideally speaking, you should be able to make money because you're actually delivering, as a brand, you should be able to make money because you're delivering faster. Therefore, you're offering a different value to the consumer. And therefore, you should be able to price appropriately. So we work with the quick commerce firms to make sure that we deliver the best product that we possibly can, right? At an attractive price to the consumer.
Growth projections that you have for the company over the next 1 year, and what are your expectations because the festive season is almost here?
Yeah, so look, for me, what matters is sustainable growth. We need to be profitable, free cash flow positive, and growing. I think as we get closer to being a public company, that's the most important thing. I feel really good about growth. I feel like we should be able to grow at 25-30% fairly easily. So that's a little bit of what we're gunning towards internally. I think the festive season is shaping out to be well. I think most people have good projections on what they want to do. If you talk to most of the e-commerce,
Right.
quick commerce platforms, everybody wants to sort of do great growth. And I think our global growth as well continues to be quite healthy.
Right. And how do you plan to sort of overcome competition given the fact that D2C brands is the flavor of the season? There are lots of investors that are actually banking big on D2C brands. How do you plan to stay ahead of the competition and maintain leadership?
Yeah, so I would say, look, firstly, it's not us versus competition. I think India is moving from unbranded to branded. And therefore, you're sort of going from unbranded to branded. Therefore, the more D2C brands there are, the better it is for everybody, number one. Number two, in terms of what we do, I think focus is on great product development and great marketing of the product. I think these are the two fundamentals of brand building, and that's what we're really focused on.
Right, but eventually it's about scale, right? I mean, as a D2C brand, it really is important.
I think scale matters. I'll give you a couple of examples of where I think scale makes a big difference. The first is technology. I think our ability to use AI, our ability to use tech in different elements of brand building, right? Whether it's pricing, whether it's ads, whether it's cataloging, that becomes much more. We've built a tech backbone because we have 10 brands. We're able to invest into the tech backbone and build it, and that is a big advantage of scale, right? Likewise, operations, which is logistics, warehousing, all of the stuff that gets the product to the consumer. That's also better with scale. Third is sourcing. Again, because you're able to source common across a bunch of brands in clusters, you're again able to get an advantage. So I think our model of having two spaces, health and wellness and lifestyle, and being able to go deep in them and create scale actually gives a big structural advantage over a single brand play.
Absolutely.
And I think that's what we're excited about.
Absolutely. One final question, given the fact that you're also an angel investor as well, what kind of companies interest you? We've seen interest in defense tech, in drone-based startups as well after Operation Sindoor. Of course, AI seems to be an investor's favorite. But what is your take on the kind of companies that you want to keep investing in?
So I invest more in people than companies. I think early stage investing is about finding founders that you like and that you think have potential more than the space itself, because the space keeps pivoting. So that's point one. Point two, I would say, is I do think defense tech is interesting. I think it's going to go through a massive change over the next 10 years. Likewise, health tech is also quite interesting. I think with a lot of AI that's coming in, those are two spaces that are quite exciting.
All right. Well, with that, Anand, thank you very much for taking the time out and speaking to us here on ET Now. We hope to shoot with you super soon at your facility.
Would love to welcome you. Thank you.
In association with SBI, be alert.